Okay, everyone, welcome back to episode 15 of Beyond the Headlines with myself and my co host here, Steve, where we take a look at what happened in the headlines this week in the market, kind of give you our thoughts on them, but more importantly, as people who don't react to the headlines, what are people who trade based off charts and technicals and statistics, which is what we talk about here all the time over at Trade Ideas. We're going to break down what these headlines may actually mean when we're looking at the charts. So, how you doing, Steve? How was your weeks?
Good. It's nice to have Friday, and it's nice to have a Wednesday off this coming week. Midweek sorbet for. I'm going to go play golf. I'm sure Michael's going to chop wood and lift weights and change diapers.
Well, it's so yeah, just talk about that for a second. So I'm Canadian, so this isn't a holiday for us. I didn't know until like one of the last marketing meetings you chatted about it. I'm like, yes, the daycare's open,
Mhm.
the kids will be gone,
Yeah.
and yeah, and I have the day off, so I may I hope my wife doesn't watch this. I know she's out right now. I may say, "Oh yeah, I got a busy day at work. I got to be in the office for a
Mhm.
while and just clunk out on the couch, go to sleep." But um, pretty decent when it comes to headlines this week. So we got a few to go over, and the first one I think is just the absolute, perfect example for why we do not react to headlines and why we wait for price. So during the
Mhm.
week, the NYSE was doing an update to its servers to prevent flash crashes, and they did a whole bunch of flash crashes. SMR, I actually got a couple messages from people who had traded SMR that we were talking about a little bit ago. That went to zero. Berkshire Hathaway went to zero. I couldn't find the other screenshot that I wanted to talk about, but you're now getting these Bloomberg, you can see this highlighted, this Bloomberg automation, and you're seeing these a lot where it's like AI generated. And I know Twitter is just doing this like crazy. Like all of the news feeds now are AI generated Twitter headlines showing a 100% in Berkshire Hathaway decline, which absolutely in no respects could happen. They own, millions and millions of shares of Apple. If Apple all of a sudden instantly goes to zero, you can definitely tell that something broke. But I saw a lot of people freaking out for these headlines. The other headline I wanted to talk about that I couldn't find was people saying, "Oh, Nvidia is down 90% as well after the stock split because the AI looked at the price yesterday, which was 1,000, and looked at the price that day and it was 100, and it said, "Oh, Nvidia's down 90%." And if you're someone who reads the headlines, you got really, really scared for a lot of things. For us that look at stock prices, we just looked and we saw the price wasn't moving, and it was a bad tick, and we just had to wait for everything to get fixed. So
That's a perfect example of technology just not cutting it and then a human being pulls it up and goes, "Oh, yeah, that's bad tech."
yeah. Well, it's you would think, you would hope that in these news companies like Bloomberg, there would be some sort of check with a human being. Because you're right, if you gave this to the lowest level intern analyst that said Berkshire Hathaway is down 100% and knows that Berkshire owns like 10% of Apple. So that means Apple is down 100%, plus everything else they own is down 100%. It took zero brain power to look
It's
at this and know that something's just not right.
It's a literal example of the human and the machine. The human with the machine, you just can't beat. The machine can't beat the human
Yeah.
curating the machine. So,
Yeah, and that's why again, so the people who see a headline and then try to instantly react with price, I think your job is going to get even harder because I think we're going to get more of this kind of stuff. I don't know if you saw a lot of the stuff with the Google AI, which has just been a disaster after disaster, but when they relaunched it after it making all those weird picture things, it started to grab the Onion article, the Onion,
mm,
and Reddit comments for its answers. So people were typing in, "How do I make my cheese stick better to my pizza?" And it was suggesting add glue, because
mm.
somebody asked that question on Reddit, and of course Reddit somebody answered to add glue, so it just pulled that out. So just again, more than ever, be careful with what you're reading, right? Make sure, you look at the stock chart, it passes the idiot test, that kind of stuff, right? But again, no real chart to look at. Just don't react to news when it comes out unless it makes sense in some way, right? So hopefully we won't have to talk about this forever, but it wouldn't be any sort of a news show without talking about GameStop and Kitty, who has sold all of his call options. I want to really stress that, and I'm going to talk about that for a second, because people are really confused, and I want to talk about the difference between selling options and exercising options. So a lot of people said he exercised the calls. He didn't, and the reason you can tell he didn't is because his price would be way different. He showed his average price, and it was like 24, 23, $24. If he had exercised those calls, he would have bought all of those shares at $20 a share, and that would have actually reduced his price. Instead, he bought them at the open a couple days ago, and that upped his price. So he sold all of his calls. He took the proceeds from that. I didn't do the math, but people did the math, probably less, like $20 million. Maybe he's saving that for taxes because he's going to owe a big honking tax bill on that one. And then he bought underlying stock. So sold, not exercised is the main thing there. The reason I bring this up is that this is the current holdings of who owns so much of a company. You have to file when you own a certain percentage of the company. So RC Ventures is the CEO, owns 38 million shares. These Vanguard and BlackRock, they don't actually own the shares. They own the shares as a custodian for someone else, or they own the shares because they have like XRT, the real estate or the retail ETF has GameStop in it, so they have to own shares of that. So this puts Kitty as the second largest shareholder in GameStop. Now, just one last kind of comment before I send it over to Steve is that when Ryan Cohen bought into GameStop because he wanted to become a board of director, he bought 9,001,000 shares. And now Roaring Kitty bought 9,001,000 shares. And after the close today, we have their annual meeting. I think this whole thing was a way for him to get enough money to buy enough shares that he can put himself on the board of GameStop. I think it's to the point now where the guy's got so much money and he's kind of bored and likes the attention, and he wants to become an activist investor, and he wants to sit on the board of GameStop, and he wants to try to help turn the company around. That's my bet. No insider information. Before we go to the chart, what do you think of all this, Steve?
Well, it all seems to be playing out consistent with what he's been doing. That those are interesting points that need to be clarified. Yeah, he's not exercising options, so there's no scramble to create a liquid event to hand him the shares. He purchased them outright in the market.
Mm-hmm.
The activist investor part is curious. It's funny because I've watched a generation come and go. I was discussing with you Carl Icahn in the
Yep.
90s and 2000. He was the original activist investor. Well, this Kitty, um, is it Keith Gill? I can't remember his name.
Keith Gill.
Doesn't matter.
Yeah.
Keith Gill, look at that. Still got it. And so he's the new generation, millennial. He comes in and boy, did he leverage Reddit and social media to
Mm-hmm.
create, quite the story, which really sparked and ignited this whole thing. And so it's been fascinating for me to watch as a gray-haired Gen Xer, the new generation of the activist investor and how he found his way onto the board. And you said today, I don't know if I saw it was moved to Monday. I think Barry said it might be moved to
And
Monday, the
I,
meeting.
I think it's after. So they tried to have it a couple days ago, but the server crashed because
Mm,
you've used WebEx. It's not the most
no.
advanced
Well,
software.
whether it's today or Monday, the next logical uh, thing to be unveiled, yeah, is he's going to become a board member. And I'll just go back. That's consistent with pretty much everything he's done legitimately. There's nothing that would ever get a regulator on his back for anything he's done,
No,
but it's been fascinating to watch.
I think it's been
And I'm still long, by the way. I've got some. I'm just
the
watching it. I'm going to let the chart tell me when to get out. I'll let the chart tell me how it reacts to the meeting, and just dictate from there. But I did a
no.
video on my entry. I'm still on that trade.
I'm all for it. right? I think it's I saw a video. I think I sent it to you, Steve. I don't know if you had time to watch it, but the guy kind of described what this guy was doing as he found a magic lamp where he could dictate a stock price without doing anything wrong. And he's like, the only time this guy saw this before, which makes sense to me, was Elon Musk, right? He tweeted a picture of what was it, the cat holding up a Dogecoin thing, and
Hmm.
then Dogecoin launched. And it's like you can never pin him down for doing anything wrong because he didn't. He just
It's
tweeted
called plausible
memes.
deniability.
Yeah, he
It's
knew full well. He bought those calls, right? That caused the initial price spike. He bought the calls. He did the tweet at the time the market was closed. He knew full well what was going to happen. But it's just so interesting because you can't accuse him of doing anything illegal. He pumped the stock. He knew he was pumping the stock, but he never told anyone to go buy GameStop. In fact, in most of his first messages, he didn't even mention, they were just movie clips and things like that. He didn't even mention GameStop in any way, shape, or form. So it's very, very interesting. I love the story. Again, I'm not a shareholder. I didn't believe the whole Moas short squeeze thing. But I do believe that the company now has, I'm gonna do something that's gonna hurt me a little bit inside. I'm gonna agree with a Jim Cramer take. And Jim Cramer's take was they have no debt. They have $4 billion in cash right now. What if Ryan Cohen just shut it down? Spent $1 billion to get out of the lease, close down every GameStop in the world that wasn't making money, sold all the inventory on auction, just shut it down, and now it's a SPAC. It's a company sitting there with $4 billion, a whole bunch of name recognition, a whole
You can do
giant
whatever.
cult following
Mhm.
of people, and they could actually just go be activist investors. They could buy other profitable companies. They could, so I don't think you're going to get this MOAS that everyone was talking about, and it's going to go to a million, but it's kind of an interesting story for a potential turnaround story. If you fast forward 5 years from now, that's what people forget. That's what Warren Buffett did. Berkshire Hathaway was a insurance company or a textile company or something.
Yeah, it was government insurance.
Yeah, and Warren Buffett
Government
bought it,
insurance,
and
Geico. Mhm.
that's yes, it was guy yes, and that's how he got his start. He bought other companies and he merged them into this company that he had, and that's how he invested. So I don't know, maybe we're seeing Berkshire Hathaway
Pop
2.0.
pop on over to my screen because as I mentioned, I'm still trading. Let's say why I said the chart will keep me in the trade. Okay, Steve, what the hell does that mean? What are you seeing on the chart that's going to keep you in the trade? So back to the other day, it was down here at 25. Okay, I started. That was lot number one. This is an opening. Let the volatility get out of the way on the open. Then purchase number two because it was holding my 10 SMA. Here's our reference, the 10 SMA,
Hmm.
and then purchase number three. So my average price is around here. Fast forward, I did take some off up here. I was back to a two-third position, and I haven't touched it. So I'm still in two-thirds of what I initially bought down here, allowed me to just kind of, hey, take it back to break even. Let's see what happens. Oh, this purple line. What's this purple line all about? This is what Michael's been focused on. This is the tip of the big last run. We have an anchored VWAP in purple coming down off here. So yesterday, or actually, yeah, yesterday afternoon, we attacked it. And Michael said, hey, every time we hit this line from the initial pump,
Hmm.
we're finding sellers. A little bit of push here. But now I want to just bring one last item into play. This is my 5 day. So it did exactly what I had hoped as it came back into play here after the test of the anchored VWAP. It found support, and a lot of it, by the way, here, candle after candle, riding that 5 day, kind of drifted higher, and now it's breaking back up. I think we're in for another test of the anchored VWAP. So that's why I had you kind of pop over to my screen, because
Mm.
we're in real time here. As you guys watch this on Sunday, this will have all resolved. But when I say what's keeping me in this trade, if this thing breaks back below, I'm out. Okay. So I'm in the money. I'm playing with the house's money. Let's see what happens.
That and I do want to hit on that. So first of all, we've made a whole bunch of bold predictions, right? So if all of that comes true when you guys are watching this on Sunday, make sure you like tweet it everywhere and just talk about how genius this guys is. If none of that happens, just let's just keep that between you and us, and we'll just kind of bury that.
That
But
never happened.
I do always love. when we mentioned, so I just want to hit this all the time, is that in that trade breakdown that Steve just gave, he got himself a little bit of profit. He took the profit. That's in his, that gives him the comfort to hold on, right? So now, I see a lot of people, they're always going for the guts, right? I'm going to buy a big lot and I'm going to wait for it to get here to sell it. And they're binary. They're I'm in or I'm out. With this and with these kind of trades, I love the I'm going to take a little bit off and then I can take a step back. My position is lower, so the P&L fluctuations that I'm seeing in my account are way lower. And B, I can just, I can let it happen and I have that kind of locked in house's money. Just keeps your brain right.
Well, it's a trade around, and it reminds me that again, go check the YouTube channel right now. About a week ago, I did a thing on the entry of this, and I talked about the 3 times I've been in and out, in and out. The same stock. It's a trade around. I'm not chasing highs. I'm watching for bases and building, entering piece, piece, piece. Good. There's my position. Exit piece, piece, piece. It's kind of a slow rolling trade around, for lack of a better term. That's what it's referred to in the industry.
Right? And we talk about it here all of the time. And I think, right, we should always continue to talk about it because what we are trying to get away from and all of the kind of smack talk I do on GME on social media, what we're trying to get away from is I don't want the people that follow me to be buying here or to be buying here because they got FOMO'd in because they see all the excitement. They say, oh, this thing's going to a billion. It's probably not going to a billion. But as Steve was talking about, you're getting these waves. And if you're someone who's patient
Mhm.
enough to get a well-timed entry in the low end of the range and take a little bit out in the high end of the range, that's fine. And we've talked about this with tons of other stories, not just GameStop, is that the people who are able to kind of time pullbacks or wait for bases and take low risk entries, they're able to participate in this volatility. The people who bought up here, and I think it got to like $80 or something in the post market. So you're
80.
talking way up here. They're stuck for a very, very long time, if ever. And if we go back on the monthly chart, the reason I know that is because there's still people caught way up here when the first mania happened, right? And I traded GME during this. I had one of my biggest P&L gains ever. I remember it was, I forget, post split, it was like $90. It was somewhere in here. When we got that second leg, I was able to take a trade there as well. So, right, trade it, don't marry it, don't fall for anything, especially FOMO. I know so many times people fall for FOMO. They think they're going to miss everything, right? Do what Steve's doing, take your trade, take your profits,
Go
have
watch
your
that
out.
video. I break down in hindsight all 3 of the trade rounds I made. Trade number one was the best trade I've had in years. Trade number two screwed me because it was a midnight reversal.
Hmm.
And I say why I was doing what I was doing because of what was fresh in my mind from the first time. Trade number three, I walked you through. We just did a minute ago, and so yeah, it's just kind of it's a wave pool that I'm playing, but I'm buying those pullbacks. I'm not chasing the highs.
Yeah. And again, most people, I think, most, especially swing traders and everything, could just turn their trading and their lives around if they just had some sort of wait for a pullback, wait for a setup, wait for a breakout, don't buy it when things are happening. And this comes to uh, a chat that I had with a bunch of people that I can't really talk about, but I worked in the hedge fund space for 10 years. So I actually had a call with a buddy who still does. And I asked him about, hey, what's going on? Are any of your funds playing with this GameStop thing? He started laughing. He goes, oh, yeah. A lot of them, couple that he knows, trying to keep everything obscured, but the day after the initial GameStop squeeze, way back in 2021, they hired coders and they hired people that were popular on Reddit. And they got the people that were popular on Reddit to plant things, and they got the coders to follow accounts like Kitty. And it would just simply, a tweet comes out, buy it. There was Shaggy Stocks or something. There was a whole website designed to, this is what Reddit is interested today. There's all of these aggregation tools. So if you're trying to react anytime a tweet comes out from this guy, I guarantee you there are hedge funds who are sitting right next to the New York Stock Exchange. Read Flash Boys. It's an amazing book with like these really short fiber optic cables that have already bought in, and they're looking to sell to you. So again, wait for your setup, like we always talk about. Next, again, this one's kind of confusing to me. One, I guess the head office of Tesla is moving to Texas. It has nothing to do, as far as I can tell, with the reading. No physical location is changing, just the incorporation title is changing from one state to another,
officially.
which, yeah, which is fine. And 56 billion, I think Elon gets because he hit all kinds of stock milestones. And that caused, go over to my screen here, and that caused this wild bump in Tesla that has been completely reversed. So another just, hey, right, don't chase these, right? So on news that Elon Musk was going to be a rich man, richer, it gapped up to here, and then it's just kind of been fading back ever since. Me and Steve talked about this, I think, during this gap right in here.
Mhm.
And we talked about, hey, if you're going to buy Tesla, don't chase the gap. Wait for some sort of pullback to close the gap. Wait for a 10 SMA or to hold, which in this case it didn't. And since we
Didn't.
talked about it, this would have been an incredibly frustrating stock to trade.
Mhm. To watch. There's nothing tradable about that.
Yeah. No, I would. So if you're looking at this now, I got to, right, you've got these.
However, zoom out.
Yeah,
You showed me that vision, that perspective earlier. It is breaking a downtrend. I think you kind of
drop
had a
this in.
downtrend in there, and
Yeah.
get out of the way.
Oh, I can move that over. Yeah. So if you draw the downtrend like that, it's got room to go. But if you draw it just more like that, then yeah, it's
That's
breaking
the one we were looking at, zoomed in. Yeah,
breaking out of
the
that.
intermediate downtrend was kind
Yeah.
of resolved.
So yeah, right. It just there's nothing the way I look at it. So the way I trade is has a lot to do with what's just called relative strength and relative weakness. I want to buy the strongest stuff. I want to be short the weakest stuff because there's all kinds of studies and academic literature showing that the strong stuff generally continues to be strong and the weak stuff continues to be weak. So when you're looking at things like, Apple, this insane breakout that happened here on Apple. I'm looking for stocks that are already doing this. You can see, right, for Steve's credit with the 10 SMA, this thing's been on an uptrend since that gap, hit the 10 SMA twice. This breakout's insane. I want to be buying stuff like this and looking to buy stuff like this. This I just look at and I say, this is it looks like a headache to me. So I don't want to be picking any trades on this guy.
Problem with me is I'm just fundamentally bearish on EVs altogether now. You see headlines. Oh, this is a great headline. We didn't talk about it, but Hertz is literally giving their Teslas away. No haggle, no 25 grand. Take it. Pick one. Pick
Hmm.
whichever one you want on the lot. 25 grand. We want out. It tells me a lot. I saw a winter where a lot of people in Chicago literally were locked out of their Teslas. I've seen power surges in California here in the summertime where people are lining up just to get a spot at a charging station. That's not a life that I want to live. I've
No.
got a hybrid and I'm perfectly content with my hybrid.
It's an early adopter thing, right? You don't want to buy like what was the Apple thing that come out that it looks so cool, the headset thing. I looked at that
Yeah.
and I'm like, that looks cool in 5 years when it's about the same size as my normal glasses, and right,
They
you
made
don't
fun of people walking down the street and you looked like an idiot already in
yeah.
2024.
And it's like, hey, in 5 years from now, it'll probably be pretty useful and it'll be pretty cool and it'll be cheaper and it'll be the size of your headset. But it's like with all technology, like that's my theory on EVs, anyways. I'm gonna let them hammer out all the bugs and 5, 10 years. Hopefully, there's a better battery
Well,
technology and all
I
that
don't,
stuff.
let me
And
just, I don't know if there's a bug for getting side swiped and then the insurance company says, we're going to total that car because the lawyers told them do not put that car back on the road for fire. And then it comes back to suit. There's a lot of going on here aside from just the technology. The insurance is a real bust because they don't want any part of battery fires.
mhm.
Those are just the worst nightmare. So if they can figure out a way to lock down the fires, then I'm all ears.
Well, so I don't have, this is just off the cusp, but I was reading a bit just because this stuff interests me. So I like reading a bit about it. Um, Lithium is a horrible battery tech. It's dirty. A lot of less than desirable trading partners are holding it. It's just not great. That is the entire problem. You know, we were talking about SMR with nuclear, but that's the entire problem with green energy is you can't store it. You know, something like fuel, just you can time it, you know, when it's working. Green energy, you can't. Now, there is a couple companies out there. Unfortunately, I keep looking. There's none that I can invest in currently that are working on batteries made out of iron, and that would be insane because it's no longer
Yeah.
combustible. It is plentiful. It's everywhere, right? You could, you know, but I'm with you, until they can figure out a different battery technology that is cheap
Okay.
and doesn't explode, I think it's
Let's
fine.
let's take the battery technology another level. Remember we were talking about, or I think we were talking about investing in morally sound things or something along those lines.
Oh yeah,
Um,
the ESG or whatever they call it.
Okay, yeah. So I've seen enough videos of young kids in Africa pulling cobalt or other minerals to
Yeah.
fund this battery market. So if we can change the fundamental construct of batteries, so kids in the third world aren't, dying in nines, I'm cool with that.
Yeah, and that's iron seems to be because again, I think it's other than silica. I think it's the most abundant
Mhm.
resource on Earth. So
Yeah, it's much
yeah,
easier to grab
yeah. Well, again, I live in Canada.
machines.
They call it the Canadian Shield, where it's you basically can't dig anywhere in our country because there's just a big iron
Mm,
underneath.
cauldron.
So yeah, so maybe this is my Canadian self being hopeful
Well,
that we'll be
that's a good
rich if it
segue.
works. But
Speaking of other countries, right?
yeah,
Is that a good segue of where we're
that's
heading next?
absolutely. Let me pop over to you here. Oh,
All right,
that's
so
me.
let's expand. We'll expand my daily. What is it?
ACWX.
ACWX. There's our friend SMR. We were just talking about SMR. ACWX. Okay, so what we have here, Michael, please explain because you're the one who showed it to me.
Yeah, so this is just an ETF that holds, and maybe you can click through a couple of these. It holds a couple other or a bunch of other ETFs like EWG, which is Germany. I think
Germany.
EWC, which is China, Canada. Yeah, it holds
Mm-hmm.
all of these different countries. So basically, it holds
France. Ew.
yeah, it holds every country in the entire world except the US. So basically, this ACWX, if you want to see how everybody who's not the US is doing, there's this chart, and then yeah, you compare this to like the SPY or the Dow or the Qs or something. Um, it's a different story out there, isn't it, Steve?
Well, I'm trying to make sense here of this. Let's see if I can get this to work. So the good news is it's on the trend line. The bad news is this ETF conglomerate, if you will, of European markets is below its 50-day moving average. It's below its key moving averages. They're
Hmm.
rolling over. A lot of airspace down here between the 200. Technical analysis is still coming into play. This is price action. But the good news is it's on this minor trend. Of course, you've got this bigger trend down here, but kind of like that Tesla chart, we've got a minor trend. Compare that to the NASDAQ, okay,
Yeah.
the US market, technology, chips, Broadcom, NVIDIA. This is nothing like what we're seeing in Europe. Now, the headlines were there were some elections over the weekend. They didn't really go. Maybe they surprised a lot of people, perhaps. That could be some of the fundamental shift in the movement over there in those European markets, especially in France. I think they called for an early election parliament. Today's lost faith. I don't understand that parliament stuff.
Yeah,
Maybe you can explain that.
as a Canadian, I kind of want so unlike you guys who have, which I think is a better system, you guys have elections on regular, you
Dates.
know every date that there'll be an election in the U.S. like ad infinitum. In a lot of these parliamentary systems, yes, there are dates that can occur, but if the parliament gets together and decides they just want to have an election, they can have it. Now, anyone who knows me knows I don't talk politics online because I don't think there is, but there are some cases, and potentially one happened in my country, where a politician will look further down the road and see that they will become unpopular based off some things that are happening now. and they will try to call an election now in order to get elected, because then it resets that date, that maximum date, until the next election, right? We don't have
Mhm.
dictators, so there's a time between the election and they have to call another one. But that's, I didn't read much about it, but that's what happened in France, where the current
Yes,
leader
correct.
said, I am teetering on losing. So if I call this right now, I think this is my best chance of winning.
2 years
And he
early.
called it. Yeah, didn't work out.
Yeah. So that's bottom line here. What we're getting at: Europe markets look feeble until
Hmm.
proven better. So America is really the one that's propping up the world. And then, of course, I want one more thing before we go. S&P strong as can be. XLF, however, I am short XLF by way of FAS. I love my triple levered ETFs. So I'm actually long FAS here, but we're not going to focus on the FAS chart. We're going to focus on the underlying XLF, kind of mirroring what's happening over in Europe. Isn't that
Hmm.
interesting? So the chart is telling me this is not holding up to its end of the bargain. Now, what could happen? Well, maybe the NASDAQ pulls back and this gets weaker. Maybe the rotation comes in and they start buying financials and I have to cover it. But right now I'm in the money because we're underneath these key moving averages. And I feel like there could be some momentum. I'm going to stick with this trade. It's actually kind of a hedge. I don't have a lot of longs either, but this is an interesting position that I'm taking by way
Uh,
of FAC.
and it, in prep for what we were chatting about, I just looked at the weightings of these different sectors. So if you go back to France, I think is EWQ there. Uh, Guess how much technology is weighted in their industry? In there,
10%. Okay.
it's all Louis Vuitton
Industrial,
and industrials and
retail,
banks, and yeah. So, um,
financial,
and
retail,
if you go to the
energy,
diamonds, the DIA, that is,
Dow.
yeah,
Mhm.
another US index that doesn't have a whole lot of tech in it. So, it seems like, with all this together, it's like either you are a technology giant, which right now it's just the US, or you're uh you're having a hard time. So, I guess the lesson would be, if you're somebody who's holding a bunch of different stocks, and those stocks aren't doing well, and you see the Nasdaq making new all-time highs, just know that it seems like this is a tech rally right now. If you're not in tech, you're not enjoying this. And the countries like Germany, that's a lot of industrials, and France, which is a lot of these retailers, these expensive retailers, and Canada, which is, I think, 30% financials, 30% oil. You're just not, you're not doing the best right now. One more ETF that I think is really cool, just while we're on the topic, a little bit unrelated, but type in FRDM. This, I listened to a podcast this week, and this was really interesting. There's a girl running this ETF, and what she's done is she's taken emerging markets. So we're going from, right, the US right now is king, and then we've got, European, Canada, Australia, which are still obviously very wealthy first world countries. Then you have the emerging markets. And what she's done, and this is just super fascinating to me, instead of looking at what the countries do, or what they make, or their GDP, or anything like this, she's bought all 100 companies, but every quarter ranks them by a freedom index. So, looks at all of the country's policies on freedom of speech, freedom of assembly, freedom of religion,
Love
and
it.
says, I want to put more money in the freest countries out there. And it's behind my head, but look at that weekly chart. Like, so
Yeah.
for me, if I ever want emerging market exposure, I like this, and I love the story behind it. I love the fact that
Yeah.
it
That's
it's
cool.
it's proving the fact that, right, you leave people alone, and you let them do what they're going to do, and they're going to create
That's all they want
strong
to be.
economies. And then look at this compared to that ACWX that's falling apart. It's actually doing okay. It's actually doing better than the Dow. So, yeah, just an
Well,
ETF
I
that
would.
I had on watch.
I would also dare to say that the EWQ is probably doesn't have a whole lot of that freedom aspect, and there's a bit of regulatory burdens over there in some of these European countries. So
Well, and what's funny,
you
that
can't always do what you want.
I looked at the components of that ACWX, and funny enough, what's actually holding that up, so it's doing a little bit better than Germany and a little bit better than Europe, is China with KWEB. There's a bunch of
Mm.
China in there as well. So, Yeah, they seem to be holding it up. So those are some ETFs if you want to be. It's one thing I love. So I'm Canadian. I get asked all the time why I trade the U.S. markets and not the Canadian one. It's because you guys have all the stuff, right? I can trade uh, Bank of Montreal or Bank of Nova Scotia or Shopify, which is a Canadian company, or BlackBerry back when somebody may want to own BlackBerry. I can do all of these things in the US. And what Steve was basically showing there is if you want either long or short exposure overseas or abroad or in different countries, ETFs for that now, right? You can trade the EWG. Only warning, I guess, caveat is obviously the US market is closed when the European market's open. So those gaps that you're seeing inside of those ETFs, those gaps you're just going to have to deal with because right that election that would have occurred during the day in France, you're not going to know the results until after the open in the US. So you're just going to have to deal with some gap risk, but again, trade accordingly when you know that gap risk going on.
All right, we had no chart requests this week, so
No.
maybe we'll try again next week.
Yeah, and again, I hate to bag, I hate to e-bag, but I really think what we're doing here is super cool. I think we give out good ideas. I think we do a good job of demystifying a lot of the clutter that's out there about talking about, hey, the market's up today because blah 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 reason, which they don't know why the market's up up that day, or the market's down today because of this reason. And we take a look at these headlines, we show what the chart's doing, we give our opinion. Again, I think it's super cool. So wherever you're seeing this or wherever you're hearing this, if you could do us a favor and do a like, do a retweet, do a comment if you want us to take a look at any charts, or even if you want us to take a look at any stories that you're talking about and we can find the charts, let us know and we'll take a look at those. So any parting words for the kids, Steve?
Just enjoy the Wednesday you guys got off this week. I'm enjoying mine.
Oh yeah, it's like when you told us that we had this day off, it's like when you find 20 bucks in your pocket.
Those are the
I was
best.
I was just like, "Oh, I didn't
Hmm.
know that. That's great." So, all right guys, until next time, I'll talk to you soon.
See you.